Alrighty, so don't forget we need to go reconcile. And so after you do a lot of these bulk, if you're really confident, now we're going to go reconcile. But I do really highly recommend if you want to be really tedious and make sure that you're doing things month by month and really, building your confidence that way, then I would definitely start with that. We left off the January, so January 31st, 23. And then we're going to go to our documents and we're going to pull up our bank statements. Left off on January 2030, so let's go to January 23. Pull up our final closing balance. All of them selected. Looks like we're good to go. Pull our next month's ending balance. And honestly, I can't remember how many days in February that year, 28. Right, all the transactions are in there. Looks good to go. Pull up our next one for March. Good to go. April. That's good to go. Okay, so let's go ahead and reconcile May now. Nope, not 2022, 23. Good to go. Let's take June. We're almost done reconciling now. That one. And by default, QuickBooks will select all of your transactions. So it's just good to have it to go check it. But July statement ending balance. Right. One more month to reconcile, and we're almost at the end of the course. How sad. All right. We're reconciling our last month. Good to go. We've reconciled all of our transactions that are available in the bank account. If we go to the bank transactions tab, we'll see that there's zero. We're all caught up. We have the green check mark. We're good to go. We've reconciled each one of these months. If we go to reconcile and we go and look at the history by account, you can see all of the different reconciliations you did. And you can attach individual bank statements if you'd like to here. You can look at the report and you can see all the transactions that make up your reconciliation to calculate to your bank balance, your starting balance and your ending balance. Okay. So now let's go to reports and let's look at everything that we've done so far, right? So let's double check 2023 just holistically real quick. So we're going to do 1/1/2023 and we'll do 8/31/23. And let's go ahead and run this report. $126,000 in sales. So it looks like from the previous 6 months, quote unquote, that we were looking at, to this next 8 months, we went from an average of 40 to almost 126, right? So it looks like the marketing we were doing, whatever might be the case, it really ramped up and it's doing really well. Looks like we're maintaining a good cost of goods sold margin here, and we can look into that. That'll be part of the bonuses that I do later. We can do some calculations. We can really see how we're performing at this level. We have some advertising expenses. Rent looks like it's in a good chunk, but in a good place overall. We've paid ourselves $40,000 from January through August. We had a $40,000 payment in salaries to ourselves. We have our utilities, we have our interest expense, and our net income is now positive in 2023. So the business, had some growing pains and took some time to get some customers, but now the cafe sales are really ramping up and there's really good sales going on. So before we dive too far into this, let's go ahead and look into our balance sheet as well. We have a healthy $20,000 in our checking account, which makes sense. Once we built up the balance on the checking account, we took out a couple of $4,000 payments to ourselves, right, in distributions. And we're going to see where those distributions land because they weren't in the $40,000 that we had in payments to ourselves for working, right? So our equipment hasn't really changed. Lease deposit hasn't changed. Sales tax liability has built up, so we really need to figure out how we're going to deal with this, and that'll be in the next chapter. As we dive into what's, how do we do adjustments and how do we really look at this holistically? Our Chase loan is getting paid down, but it's over like I think a 3-year period. So obviously we only did 1 year worth of payments so far, so we're at a healthy $4,900. You can see here, there's distributions of $8,000 here. And this goes into the equity section. So that's where our two $4,000 in transactions came from. And again, we're looking at retained earnings because, again, I forgot to switch the date. So if we switch the date here to as of, we can do 1/1/23 to 8/31/23. We run the report. We'll see that we have the first year, so 2022 from July to December, there was a total of a negative net negative 5,500, right? Let me just get rid of this so that it stops complaining. We have a negative 5,502 from 2022, and we have a current net income for this year for 36. So when we looked at that number from before, which was looking at the balance sheet as of 24, you would have noticed that that number was actually not the net income figure. It was 5,500 less, around 31, 600, some change like that, right? And that's because as you move on to the next year, net income rolls into the retained earnings. And again, we'll go over some of those other things, but a lot of the major adjustments you'll be making are going to be CPA guided. Fixing sales tax liability is not going to be a CPA guided thing. We're going to learn how to do that together. But let's say, journaling distributions into your retained earnings, journaling uh, your asset depreciation. Those things will be CPA led and they'll tell you what to do. And most of the time, especially, if you're sharing your QuickBooks account with your CPA like you should be doing, they will be able to do those journals for you. So you don't even have to worry about knowing how to do it. Um, so from here, we can move on to the next chapter and really learn how to finish out these books, generate some reports, and do some calculations on these reports as well. So I'll see you in the next chapter.